And let me just introduce the moderator first. So Chirag Sagar is coming up to lead this conscious investing panel. Chirag is co-founder of a company called Mission Matters Media. He likes to help people who are helping to save the planet for humanity in multiple different ways, to highlight their work and their accomplishment. He's an expert on entrepreneurship, leadership, and business. So please help me welcome him and his panel.
Awesome. Thank you for having me. All right. Well, I don't think so. No. Awesome. Well, why don't we just go down the row here and maybe have all the panelists just introduce yourselves.
Thanks for having me again on this panel. For those of you who maybe came at lunch, I'll just quickly introduce myself. I'm the founder and CEO of Scope 4 Capital. Raise of hands, who knows what Scope 1, 2, and 3 are? Okay, raise of hands who do not know what Scope 1, 2, and 3 are. Okay, we are all talking about climate change. I think it's important to talk about what Scope 1, 2, and 3, and then 4 are. Basically, if you're a company or a country and you want to add up your emissions, there are 3 types of emissions. There's the first, Scope 1, which is basically direct. Scope 2 is indirect emissions, and then Scope 3 ends up having 11 categories. It's a little bit confusing and very debatable, but it basically is what are your emissions up and down your supply chain. So from the very beginning to like mining all the way through to waste. And so I decided to name the company Scope 4 because it's all about climate solutions or reducing or avoiding emissions, not just adding it up, but then addressing it. So that's ultimately what my company does, very similar to what Lauren is doing, but in a totally different market, which is public companies.
Awesome.
I love the stories of how we all name our companies.
Yeah.
It means a lot. I'm Mark Dewey. I'm a principal at Inyo Ventures, and I named mine after the Inyo National Forest. I'm from Mammoth Lakes originally, and so just have this huge passion for the outdoors and everything that we're born and raised in. But I've spent 20 years kind of on the venture capital side of the table, mostly in and around fintech and financial services, payments. Our latest fund was a bank technology fund where we were working with community banks and trying to figure out how to deploy capital more into the community in the ways that the venture world has been doing for so long, and empower the banks to compete against the money center banks out there or the fintechs or anything like that. Yeah, glad to be here.
I will yield back my time in deference to talking, other than to quickly note that I apologize in advance. I do have to leave at 2:30. Summer camp hours for kiddo drop-off and pickup are unforgiving.
Same.
So I apologize there. I am available at Lauren at lowercarboncapital.com or through LinkedIn if we don't get to talk through things that you may have wanted to raise.
Awesome. Well, why don't we start maybe just high level? How do you define just conscious investing in comparison to investing if you're just a normal investor? And maybe to start with some basic definitions just for the audience.
Can I go first?
Sure. So, I mean, in our industry, I think in venture, we've got obsessive curiosity is how I define it. Everything we look at, we think where it comes from, why, who's making money from it, things like that. And for me, up until recently, I started thinking about more of conscious investing around impact and resilience of the things that we were backing. And so, for everything, it's not just for ROI anymore, but it's just, the impact that not only it has to our LPs and our investors, but the people who are using it and so on and so forth.
I would just add to that, maybe it helps to bring a little context of how our founders, Chris and Crystal Saka, and co-founder Clay Dumas, came to decide to build Lower Carbon Capital, which very quickly, Chris and Crystal are known as very successful venture capitalists of the 2010s age in all kinds of kind of generic consumer and other very, very popular companies that you would know today. And that's how they made a lot of their wealth and did really, really well. And then as they moved on, were looking really in their own personal investing, how to make a big difference across climate and diversity and democracy issues. They got very, very passionate about climate. And in terms of the conscious investing, I would just say they were super conscious to make sure they understood the sector. They spent time with scientists sitting in labs for days and weeks with entrepreneurs, really understanding the depth of the industry to say, if we're going to start a new fund, if we're going to be raising other people's money and have the fiduciary responsibility of other people's money in addition to ours, we want to make sure we really understand these sectors and what we are signing ourselves up to, because our goal is to have a huge impact on climate. And we have to do it in a way that's very, very responsible, not only because that's a fiduciary responsibility, but in order to crowd in more capital and have that sort of positive feedback loop.
I would just say that it's about voting with your dollars. Prior to launching Scope 4, I decided that I wanted to invest my own capital to shift the way that I was seeing the Earth evolve. I'm an avid learner. I love to read. I'm an avid traveler. And I feel sometimes when we talk about climate change, it feels far away. Particularly in the United States, I feel like we're very shielded from a lot of ugly things, like industrial agriculture. We're not allowed on any of those farms, and we don't really know what we're eating, for example. And most of us haven't been on ships where they're trawling the ocean, right? We just sort of receive what we're given, and we don't think about where it comes from. And so to me, conscious investing, as I began to invest my own capital in my business and also other funds and entrepreneurs, is about saying, okay, my dollar holds weight, and I'm going to, as a consumer and as an investor, be thoughtful about what I want to move that energy towards.
Awesome. And actually, and maybe just to get a little bit more context, how did you end up in this space? I guess a little bit of the origin story for each of you, because all very different in terms of what you guys are doing and how you got here. But I think that actually could probably set the stage and maybe even inspire others that are walking down or may be interested in walking down this path.
I will yield my time.
You do come from the politics,
Yeah.
the politics side. Look, I came from a small town, community college, didn't know what I wanted to be when I grew up. I remember coming to San Diego and seeing a 3-story building and thought I was the biggest city in the world. But I just, for some reason in my DNA, I just kept, iteratively leveling up, saying, I want to be this next, I want to be that next, I want to be that next. And at some point, I just said, what would Harvard do? And I started looking at books and picked up a venture capital book one day, and I just got bit by the bug. And
Do you remember which one it was?
It was just called, Venture Capital for Dummies. It wasn't that. It was like Venture Capital 101 or something like that. I just carried it around. And then I just got into angel investment groups and things like that, and just spiraled. And I just got hooked. The fact that going back to how you vote was something we talked about 10 years ago. We're just thinking about every check we wrote, everything, about the people, where they spent their time, where they spent their capital was really important. And then on the other side was most of the people in this audience didn't, or even at our venture, or LPs or angels, they didn't understand everything you did, right? And they'd been told, don't invest into things you don't understand. And so nobody was doing climate change, or nobody was doing, we were doing fintech. And so, but we were saying, we will do all the due diligence. We will understand everything for you. And you need to trust us. We'll give you, you'll write us a check. We'll be a fiduciary, but we're going to invest into not what's out there already, but what's coming, right? And so with that, it was just the people that I met. I got hooked. So here I am.
I would say for me, I took a trip actually to Vietnam, so it was a confluence of personal and professional things. As I mentioned before, I was in very traditional investing. A lot of our clients started asking us about how we were approaching climate. And I took this bike trip through Vietnam thinking I would be in a lot of nature. And it ended up being just a lot of like trash on the sidewalks and trash in the waterways. And A lot of pollution before COVID, where everyone was actually wearing masks because they were burning all of the trash as well. And seeing a lot of lynxes on the side of the road, for example. And it's not special to Vietnam. It's just, I think, a part of what's happening all over the world. But it was so visceral for me. And I remember on the flight home, after reading books like Project Drawdown, which I had referenced before, there's another book that I love called Garbology. And I always talk about that. If I were to start a podcast, it'd be called Trash Talk. But I felt like I didn't.
We're going to do that.
Yeah, let's do that.
I can help.
It feels very hopeless. We've been talking about that. How do we find agency in what it is that we're doing? And so I actually quit like a 7-figure job to launch my own firm to do something that was very outside of the box, because I really believe that particularly not only us as individuals, but also institutions like endowments and foundations that have not just millions, but billions and trillions of dollars that they're investing in every single day, that they need to start allocating some of that to climate change. And there aren't enough investors that are pushing them or educating them in that direction.
Love that. And maybe just some examples. Incredible, by the way, because for all the risks that you took to walk down this path. What are examples in terms of like using your dollars to vote? What types of companies are you guys backing in? I know, Lauren, you've kind of answered this, but if you want to dive in a little bit deeper, by all means, go for it. But maybe we can go down the row.
I'm just trying to think of, it's a lot of what Lauren talked about. She talked a lot about innovation, and what we're more investing in is technologies that are ready to scale and be distributed. So I can't remember the exact study that I read who it was by, but about 2/3 of the technology that we need to solve this problem we already have. And so we obviously still need to continue to innovate, but we also need to take what we have and begin to move it. So we're investing globally. I talked a little bit about Japan before. There's a company that we've invested called Dewey out of Europe that basically does commercial recycling. And so every company that we invest in already is profitable, and at least 50% of its revenues are geared towards climate solutions. So, which I think is really important, right? When you're investing in a company, if like 1% of its revenues or 2% of its revenues are doing something, when Trump is elected, they're gonna axe that business model immediately. They're like, we don't need to do that. This isn't in our political best interest. But if it's at the core of their business model and where they're generating, they're gonna find ways to continue to innovate, to grow. So that's one example.
Yeah, one of the things I was thinking about with what you were saying up there is this whole unlocking of what AI is doing right now. And AI's works so well, it's almost a commodity now. It's going to be in everything. It's, we don't even talk about it. It's in everything. And so, but I think about what it's going to unlock, right? And whether it's climate, life sciences, financial services, you now have this tool that you can go back and test everything. And so when I think about what you were like, it's accelerating everything for sure, but now it's giving us an opportunity to go back and retest everything we thought we knew. And it's not like the whole internet's going to hit reset and go back to beta. But in some ways, I think now we have tools to unlock better drug discovery. We have things that unlock, better things around climate change. And so for our thesis, we're trying to go and find things that we can go back and test and just make that next iterative move on any sector, right? And so, and I think it's going to accelerate everything, like you were talking about there.
I have a quick question. Are you guys invested in grid infrastructure? I feel like that's something that people aren't talking about enough.
Yeah.
And so feel free to go ahead.
Yeah, I mean, it's so interesting when you describe sort of where you fall, like, as I mentioned, in the capital stack, like what kind of investments you make, and you are focused on companies that have to already be profitable, which is totally different than the investments that we make, which is definitely pre-revenue companies. And They are different scales of investments, right? Like smaller companies versus slightly larger or much larger companies. Sometimes we invest, often, we're investing in people, in the founders, in a founding team who we believe are going to build the thing they say they're going to build. It's a very different sort of way of operating, way of thinking. It's really less about the product and more about the people. Are our bets. But it's what I keep uncovering and seeing is how important it is for all of these different sort of stages of investments to be really linked, for you to understand what's coming down the pike, for us to understand what's of great interest so that we know that there's sort of a next step for all of these companies. And we're in a place of really being able to build that ecosystem together. It's incredibly exciting. And then the other part of that is, how do you get to profitability? What is the commercial ecosystem that you're building up? You brought up grid infrastructure. Who is the customer for improvements to the grid? Who is the customer for alternative sustainable aviation fuel, jet fuel? Who is the customer for that cement? What can the signals that they send by saying, we're going to purchase, we're going to tell you now, you say that product is not going to be available until 2029, let's say. We commit to purchasing that product for the next 10 years, starting in 2029. That sends a signal to other investors, to banks, to say, okay, it's a good bet to build that project. And this sort of virtuous cycle in the financial system, which is very hard to call virtuous, but there is a cycle to be able to mutually reinforce good investments that actually you as individuals, as consumers, as the consumer companies themselves have a huge role in bringing that confidence to the rest of the financial infrastructure.
I don't disagree with you, but I do think that venture needs to be reset in some ways. Mm-hmm. And that building
Agreed.
things, building things like the constellations in the sky or some of these really big products aren't, like, I have to break my brain to get out of the problem, solution, customer, Y Combinator, mentality, and think about, like, okay, if we really want to have, these constellations or space infrastructure, we want to have these big solutions. Like, I don't think we can invest the same way as we did into a software company.
Right.
For me, and that, right. And I wrestle with that, and I just think, like, again, there's something that needs to change amongst everybody that's deploying capital.
Well, and this is the point I was trying to make before, is we are probably 60-40 hard tech and sort of software. And so the bulk of our investments are in physical infrastructure that it takes a long time to get built, and it takes a long time to see that return. That is not a model that venture is very accustomed to. That's not the kind of Google model, that's not the Twitter model. It's interesting that you have like a Tesla out there that is a physical thing that we are building, and you need to create factories and things like that but they're still a private company, right? So it's not even that much of a example that you can model. So we absolutely are, I think we're sort of on the front lines of rethinking how venture plays in a space where we are building infrastructure, building hard tech that is kind of in a fundamentally different timeline and return profile than what I think venture, before I came along, venture was really built up on.
Because I think it's worth noting, this is sort of being implied on this panel, but we're not saying it outright, that the majority of climate solutions is about infrastructure and industrials. Like, that's what it's about. It's not necessarily about software and technology, and that's the science behind it. And so the way that we see the model that it's been extended up till now is these software, it's mostly software business models, and they're trying to apply that to invest in industrial companies, and they've been upset about it, right? It's upsetting because they're expecting a different return profile, and they're expecting a different timeline that's just not applicable. It's like apples and oranges. And so I think that's what you're alluding to when you say you think it needs to
Yeah.
shift.
Yeah, it's shifted, but I think it's just, okay, who is going to be the solution for long-term patient capital? And I don't necessarily, maybe the endowments get there, there are some funds that are out there, but I think it's us. Like, I
Yeah.
think it's us, like, figuring out how to throw our 401k, like, we want a 10% return, we don't need a 40% return. How can we throw that into something's more patient? So to me, it's just I don't know, it's a fintech problem at the end of the day, right?
Yeah.
Well, and it's interesting because in that way, like it doesn't have to be the whole game,
No.
right? It actually can just be this like very, I don't want to say marginal, but like relatively small proportion of the overall investment that just sort of de-risks the whole thing and provides sort of a source of cushion to bring in massively larger sets of dollars. So we actually can have quite a disproportionate impact relative to the amount invested just by nature of it being, you know, willing to take on that kind of risk or lower return profile to let in a lot more money.
Sorry, I saw the fun.
No.
We got off the
Actually,
rails.
I want to double down on this a little bit further. We talked about how AI is basically revolutionizing all the companies, even how money is invested, even just from your stance as investors and how you're deploying capital. How is AI directly impacting for yourself individually and across the entire industry in venture? You know, we've seen venture completely evolve where you don't need, and I think there's been tons of articles on this about like the 1-person unicorn company or the 10-person unicorn company. To that point, you don't need as much capital, right? I know Mark and I were just talking about this. You don't need a $40 million fund because you only need maybe a couple $1 million and see. How is that driving you? Because it is moving so fast. So even from your lens, I guess each of you maybe take that question.
Sure. I would say that it hasn't changed the amount of capital that we think we need, the planet needs toward climate solutions overall. We're investing in really large, you know, physical assets, or at least the companies that are building major physical assets. I mean, we have a fund, a separate fund solely dedicated to commercializing fusion energy. And as you can imagine, sort of a seed investment in a fusion company looks really different than a seed investment in like a battery software technology company. And that's why you need sort of a different fund, because it's so fundamentally differently. But we are really deeply in that space. AI kind of comes into our lives in maybe 3 ways. One, we sort of use it internally as much as possible to be as efficient and quick and nimble as possible in our processes internally. And I love how there are some very intellectually curious and just excited folks internally who go, okay, I tried this thing and we can use this for this process that we undertake, and that's exciting. AI comes into our lives, as we've all noted, as it's accelerating the pace of innovation because it can accelerate the pace of experimentation and analysis. So that's incredible, and that's huge in really any sector. And then in the third way is, for better or for worse, AI requires a huge amount of energy to run, to exist. And the access to energy is essentially the number one limiting factor to the growth of AI, which, you know, tech companies see as sort of their existential issue. What that has done is created a race for and a hunger for energy that could be perverse and has enabled more openness to new natural gas, to reopening nuclear, retired nuclear plants. It has also opened a willingness to pay for clean energy technologies like we have never seen before. And so it is unlocking a pace of change for clean energy. It has increased the pace of being able to deploy clean energy resources and letting them compete much more quickly than we had seen just a couple years ago.
I'll keep mine pretty short because I see we have 5 minutes remaining. But we're using it. It's all data at the end of the day, so we're using it to try to figure out, at a localized level from a fintech perspective, bioregional stock exchange. What would that look like, right? Some of the other things was time-based equity, just thinking about some of these investments as we make it. We all have vesting schedules and things like that, but it doesn't get unlocked unless certain climate goals are made or certain goals are made and things like that. I was doing my trust yesterday, updating my trust for my kids and thinking about, how can something be tied to what I give them based on, my grandchildren's dividend and locking up value and them getting an inheritance based on, climate goals or anything like that. So it's just like rethinking, we've all heard everything, right? So it's like rethinking and then pointing towards that and trying to build it for us. And using AI to do it.
It's solving all of my relationship issues.
Yeah.
I
It's telling me how to manage my
feel
6-year-old.
so good about my relationship
planning
with
my
my
vacation.
daughter now. No, I would say that in our portfolio, it's about 20% of our portfolio right now. My portfolio manager is in Texas right now, actually visiting a ton of data centers. But we're more focused on it, again, from an energy efficient standpoint. So we invest in things like liquid coolants, which is really important. The whole reason that it needs so much energy is because it gives off so much heat and it requires so much water. And so there are a variety of different technologies that can be implemented to reduce that burden. And we're invested in that in public markets. And then just in our everyday business, I mean, it is good with data. It's sort of this double-edged sword. I don't think it's going to solve all of the world's problems. I'm a little bit worried about some ethical things around AI and how we're leaning on it so heavily. And actually, it's supposed to deteriorate your brain functioning if you just continue to lean on it, because you're not really using those. You're like, oh, how do I write an email? Mm-hmm. But I think in terms of the data piece that you were talking about and just being efficient with your time, climate data is extraordinarily inefficient. The way that companies are able to measure their impact and even verify what their emissions are there still isn't the sameness across the board, and so I think that AI can continue to help with that.
And then one final question, maybe a minute each, just so we can end on time. 2 minutes, perfect. 30 seconds. What are you excited about over the next 6 to 12 months in terms of what you're seeing, and any final comments?
I can just quickly go. The stock market is a barometer for how oftentimes people feel it isn't necessarily, I mean, it's inefficient, right? And so it doesn't necessarily equate to the value of companies. And what I've seen over the course of the last, let's just say 2 years, is really negative sentiment around climate-oriented companies. And what I'm really excited about is I'm seeing a sea change in that. What most people don't realize is that renewable energy companies actually did 2 to 3 times better during the Trump administration than during the Biden. And so to kind of underscore the fact that, I think Lauren had some slide up about that policy and politics aren't going to necessarily get in the way of what the market is demanding. We're finally seeing an inflection point in valuation that's actually reflecting the value of these companies, which is really positive.
Yeah, I'm just, look, I think what I'm excited mostly is just it's what's happening right now with in my sector with the banks and everything. People are really trying to think about like deploying capital the right way. And, look, it goes back to what you said on the vote. Wherever you put your money and deposit your money, whether it's a community bank, just make sure you're voting for the right way, whatever your way is, right? And every swipe of the card or whatever it happens to be, I think going forward is going to be amplified because this next generation and our kids are just thinking about, stuff that we didn't and how the world is going to be a better place for them.
The pace of innovation, it blows my mind and makes me so excited, not just because we need to deploy quickly, and I know that most of those, 2/3 of the solutions that we need, we have, but actually they need to commercialize. And so that pace is really what we need to focus on. The thing that is really incredible to me is to see how much young people and people in the workforce generally want to go into or transition into climate. the entrepreneurs that we work with, some of them, yes, are coming right out of grad school, but some of them have been really successful in one space and kind of go, meh, I don't know how good I feel about that. Where I really want to be, not because they're doing something bad, but where I really want to be is in an area that I think is the most important, most impactful place that I can do work, and that's climate. And to see so many new entrants into this space from any walk of life, not just because they want to found a company, is the thing that makes me most optimistic.
Awesome. Well, we ended on time, so.
I'm sorry, I'm talking again. Just one of the things is, do you measure the companies that are, you're wanting to have investment with the triple bottom line, which is the people, planet, and profit? Because to me, we want to invest, but we want to invest in companies that are really fair share, good, fair wages, all of that stuff, So just wanted to know about that.
I think, like you said, people first. Like, so at our stage, it's, the measurement comes from the person itself, and everything that they're building going forward is based on all 3 Ps. I mean, that's for me. Later on, it gets harder when you get up.
Yeah. Let's talk about that offline. I have lots of thoughts.
Cool.
Yeah. All right, thanks.
Thank you, everyone.
Thank you.
Thank you.
This is great. Thank you. Yeah.